All right, everybody, welcome. This is John Novak with Nexgen Software. Today is May 29th, and I wanted to do a couple things for you real quick. First, we're going to review the day, and I wanted to just make you aware again. I sent out an email on this, but just to double check, in our trading plan, I have added this to page 2. And short version is these are literally over 20 years the highest probability trades you can take. And again, the rules are very simple. The looks are very simple. I've got them all documented here, so you can just right click on that and you can open up the look, when it's fully green on the big chart and there's nothing in the way. And anyway, the rules are simple. I'll let you guys read through them. The other thing that I put in here is medium probability trades, and these are technically, I would still call them very high probability trades. Really, really good chance to make a bunch of money if you've got one of these two looks. And again, it's very imperative that you have the opportunity to recognize these looks. And again, these looks are very, very simple. If you look at this large chart over here, again, it's a trend trade look, trend trade rules on our large chart, and then we trade from fibs or the edges on our small chart. And basically, it calls the tops or bottoms for you. So what I wanted to do is I wanted to take a look at today's trading action. And again, this, our trading plan starts with the 14-2 chart. This yellow line I put in here is midnight. So I just wanted to go through two of the different looks that we have in this simple plan. And again, this is how you use this thing. This is how I want you to use it. These are the looks that will create reversals in the market, period. 100% most of the time. There's exceptions to everything, but more often than not, you can bet your bottom dollar that these are going to reverse the market. And again, it's not that there's a trade here. These are the looks that I've got, again, very well documented, when you're going to stop taking trades. When you reach the edge of Fibonacci support or resistance, when you've got a big gap to the triggers, when you've got a trend trade on your chart. Those are the looks that basically will kill the opportunity to make money on your smaller charts. And again, it's very simple, very, very clean, very well documented. All you have to do is learn just to take these. Really, if it was you or me, I'd take those and those only. If you feel the need to do a counter trend trade on a small chart, this is your perfect two looks. There are no others. And, I've never seen anybody lose in 20 years that follows these rules. So take that for what it's worth. So let's take a look at the chart. Look how simple this is. First things first, the white boxes that I drew in. The white boxes tell us the condition that has the market potential to reverse. So whenever we reach these synthetic triggers from the wrong side and there's a potential for divergence, the market could go down. And again, when the market's going down, if, we break support and the triggers are below support and we get a pullback and the color is dark red and we have yet to reach, again, look at how simple this is. We have not reached fibs or divergence lines. And the background color is dark green. You can do a trend trade. So that's it. So if it's dark red, you haven't yet reached one of the lines, you can do a trade on a pullback. Now, this white box represents the space at which you can't do a trend trade anymore, short. Why? The rules are very simple. If you reach a prior divergence line, and again, I can show you this in here, but you need to know this stuff here. If you reach a prior divergence line, stop doing trend trades. Price getting above or below prior divergence lines really hurt your trend trades. And again, when you add in a negative number of divergence, it really helps that. Helps everything that we do. So look what happens. The market comes down. We get a negative number potential. Price gets back above the divergence line, no more short trades. That's it. Market's going up usually. And guess what? The market went up. Now we ran into the same thing right here, right? We got to a prior divergence line, and this is the key to when we can take more long trades. The divergence line stops plotting. It just means that you closed above it. It's nothing magical. So you see that bar right there? We closed above it. So if you get the opportunity for another long trade, you're going to do it. Just so happens that the background color is green and every one of our trend trade rules was met. So look, let me take the picture out of the plan here and I'll show it to you. It's going to look very simple. I mean, this is a trend trade short, but trend trade short, edge of Fibonacci resistance, you can go short. In the plan for the long look, let me show you the long look since this is, maybe I did that backwards. Okay, look at your chart on the left. This was taken on gold on May 22nd, so a week ago. But you see the look? Strong up, pulls back to the mid-band, divergence, trend trade, the market goes up to resistance. Here's today. Crude oil, May 29th, the market goes up, pulls back to trend trade rules, and lo and behold, it goes up to resistance. All right, so that's what we're looking for, somewhere down inside this box. And again, we're going to take these boxes and we're going to go to our small charts, and I'm going to show you where the rules are met and where the money's going to be made. Okay, now the rules state in this simple plan. Look how simple. If you reach resistance, you stop doing trend trades. Better than that, check it out. If you reach Fibonacci resistance, that's not the right one. Fibonacci resistance and the trigger lines roll over and you have divergence. I mean, these are pretty much all the same. They wait for the trigger lines to roll. I want you to look at this look. This is the divergence pivot stop out we just talked about. Continues up. And again, you can go study these looks, but I'll make it very simple for you. This white box up here, you can see where I'm moving a little bit. I'll put an arrow. You have a negative divergence potential. You have a red Fibonacci line. Right, so again, divergence, Fibonacci resistance. No more long trades right there. And if the trigger lines roll over, guess what you get to do? You get to do a trend trade short on the little chart where this green box is. And then maybe one more trend trade short on the green box. You know, that one's a little bit iffy because we get pretty close to, again, a trend trade look long. Now, don't let this one over here trick you into thinking it's the same one as over here. The one over here on the left, if you watch the videos, has what? You can say it, so you can see it. No divergence, plenty of room to Fibonacci resistance. This bounce that looks like a trend trade is after Fibonacci resistance and divergence. So usually we don't do any more trend trades in that scenario. Let's just get rid of that. So we get ourselves kind of mixed in the middle here between a trend trade long that probably won't win on the big chart, resistance, and yeah, look, one of two things is going to happen. We're either going to retest the high and break through and, and then we'll do more long trades, retest the high, and then maybe we'll do trades off the edges. Or, again, since we're not doing long trades, if the triggers break strong enough to the downside, which you can see they did here, and, again, we started to get our small triggers below everything, trend trade short, maybe even a trend trade short here. And then once we reach Fibonacci support, what happens? No more short trades, right? That's it. Easy. Now, the market does continue to go down, right? But we're not going to do trades going down yet because of our rules. So you can't really go long because the triggers didn't roll up. You can't really go short just because the rules say if you get Fibonacci support and above. So we wait. And, again, for those of you guys that know our software, when our trigger lines and the background's blood red and the trigger lines are past our blue fib, we're going to the next area. It's just what happens. So this little green box right here is the first place on our 14-2 chart where the indicators agree, right? Well, look at the rules. Everything is dark red and there's no fibs and no divergence in the way. That's the rule. Very simple. Well, at this point, we have trigger lines below fibs, so this fib's going to break and turn red eventually, so we get an opportunity to kind of jump that break because of the look of our trigger lines. And as the day progresses here, as we're working our way towards lunch, this one should be hurtfully obvious, right? Nuclear strong down triggers, nuclear strong down synthetic triggers, and short trades. After lunch, maybe one more short, and then the market starts to reverse. And we have really, really, really strong triggers to the upside. You can make a case and say, hey, maybe we don't want to take a short trade here because of, a little trend trade down look, which is fine. And again, this is the one that I put on here as medium probability. Trend trades long or short on the big chart. And the reason I put medium probability instead of high probability is because if the triggers are too strong going into a trend trade, so what we have to do is kind of gauge, this is the spot. Here, watch, I'll slide it to the right edge. During this bar, one more, we have to gauge the strength of our small triggers and the chances of these triggers really causing a reversal when they're that strong up. Traditionally, if you read through our literature, if the triggers are already at the edge of the trend trade and they're that strong, you're going to break through. So, this one, we'll put it in the 50-50 on the long category, but really, really strong triggers up. And then this is, working our way to the end of the day. Using the 14-2 chart as the king of the hill, right? If you focus in on the small chart, you lose the big picture. So we have to ask ourselves a question. At this bar and this bar, are the trigger lines both strong enough, and is the green color strong enough to give us one long trade or two long trades? When the answer is yes, we'll go to the small charts and see where the money is. So again, just to review the day, lots of action, and everything that you need to know is right here. Which are the ones that are so high probability you have an ultra, ultra, ultra high chance of winning? Which ones are medium probability? If you've got a really good setup, you're going to take it. Again, just take a look. If you have a trend trade and you have Fibonacci support or resistance on your little chart, those are the best ones. You'll see. And then you just have to learn these things right here that will tell you when to stop doing a trade, which is where I have the white boxes. And again, on this page, I've got all the resources you need, introduction to the indicators, how to interpret Fibonacci's and trigger line reading, the rules, how to get your actual entry, how to manage the trade perfectly, spotting high probability versus low probability trend trades, how to go back in history and study, which we're basically doing right now. And then obviously user guide and indicator descriptions and NinjaTrader basics, and then the trading plan, which we're in now. So let's take a look at, and again, we're going to focus on white boxes as stopping points per the rules like we just went through. And we're going to look at the green boxes for potential money. So again, let's go to the 5-1 chart here. And again, this is where the rules kind of start for us. So, let me go back to the beginning of the day. And again, this was our first white box. And look, the white box means that you've met rules that say, what I should do is write this out for you. No more trend trades. And again, I don't want you to take this lightly. This is literally 20 years we have spent on defining the conditions that is going to make you lose a trend trade most of the time. Because if you only focus on the little chart, you're going to end up trying to do a trend trade here and you're going to lose. And you're not going to know why. So it's imperative that you learn very, very quickly and very efficiently what are the looks that are going to cause these white boxes, the ones I've drawn, that will create the conditions that you have to stop doing trend trades on the little chart, or you're going to lose. So again, I want you to visualize this. This was our white box because we had the rules for no more trend trades. If you try to trend trade here, you lost. Don't do it. So if you can't do a long trade, what's probably going to happen? That's right. You guessed it. We're going to end up going down. Now, some of our more advanced traders will look for some areas to take some additional trade setups. They're a little outside the rules. So, again, we're not necessarily going to try to break the rules here. I'm just going to show you where the rules are true, as it is per the plan. So conservatively, we stop doing trades, and then this is the look that we want to see for us to start doing trades. And again, this is that green box where we had the little pullback. And again, it should be pretty darn easy. Just think about this for your rules. You want to pull back to an area. If it's blood red and your fib to fib oscillators at 75, start looking for a short trade. That's it. That's pretty much it. And, if you did a short trade over here, you had an opportunity to make some money. Granted, you're probably sleeping. It's 4 o'clock in the morning, right? Watching the NBA Finals. Now, we get to another white box. What does the white box tell us? Rules are met for no more trend trade shorts. That's it. You just have to learn the rules. At this point right here, when we get back above that little cyan line, that's the point where we get the condition that says no more short trades because we're back above a prior divergence low. That's it. That's all you need to know. Now, some of our more advanced traders, again, you have to keep in mind, the conservative brand new traders really need to stick to the rules. But you'll start to see, well, if I can't do a short trade and I'm at blue Fibonacci support, what's going to happen? If I can't do a short trade and the background color is green and I pull back to a green midband, what's going to happen? Yeah, these are just thoughts that go through your head, right? So as we progress forward, we talked about what? We talked about, again, this green box. And, this is the one that's not a trend trade on a small chart. Just one time today, look. This box right here. It's a trend trade on the long chart, followed by potentially 3 more trend trade longs. So look, when we look at our small chart, and again, look, you have to see the whole forest. Don't stare at the small charts because you can see we're coming down strong and we get to our 14.2 reversal bar marker and the background color turns red. We're not going short because the little chart's red. We're going long at lots of blue lines with a trend trade long because that's what the rules are. And again, there's no other way other than to say you have to learn the rules. So if you have a perfect trend trade look and a dark green background on the 14.2, you can go long, especially if you're at the edge of Fibonacci's on the 5.1 chart. Well, what would you guys say? That's a bunch of blue lines on the small chart, isn't it? And if you took a long there and you had that trade in your arsenal, at least a couple $100, right? Now, let's go through and look. right? So again, green box. Do you see the trend trade? It's pretty easy, right? Remember, the lighter background color usually means you make a little deeper retracement. So again, that's why we put this in here. So this was your, I'll just draw it out for you, trend trade long 14.2 chart at Fibonacci support on the small chart. And then this was your trend trade on the 5-1 chart, right? And again, I'm not going to pull in all the charts and do too much reading, but you know, I think you kind of get the idea here. Trend trade long, trend trade long, trend trade long. And then, lo and behold, we hit a bunch of red Fibonacci resistance, which just so happens to be the Fibonacci resistance, remember, on our big chart. So this is where this negative 65 is. What does that mean? No more long trades. So long trade, long trade, long trade, long trade, 4 winners. From 7 o'clock in the morning until about 9 o'clock in the morning. Then we hit resistance, triggers rolled over. Guess what we're going to do, guys? We're going to do short trades. So let's find our next green box. So after a strong uptrend, we usually, if you watch the video on trend trades, we usually make it back to the trigger lines. And this is the first place where we can start to do a short trade coming off of resistance. And again, this had the potential for, you know, at least a couple $100. A lot of people took that trade. Now, this was the second one that we said was a little bit iffy. So again, maybe some of our guys took this, maybe they didn't. And again, remember we had the white box down here. What does the white box mean? No more short trades. That's it. So, no more short trades. That's easy. And what happens? Remember that in-between spot we talked about on the big chart? Look at it. You'll see it's easy. Resistance holds, right? So, one short trade, which we just talked about. And this is the maybe short trade. We won't even count that one. And then we get to a trend trade look, which means no more shorts, but we're coming off of resistance, so no more long. So this was our wait period. So we put a circle there. And then, guess what happened? The trend changed. And again, this is one of those trades where sometimes they get you. You're going to have to do a trend trade short right here. And, you know, again, when you get the management rules right, you'll know that you're not going to lose much here. But this was one where you were required to do a second trend trade. And again, you know, you might have lost a few ticks here, and then you made 20 whatever here, coming down into Fibonacci support. Now, again, we talked about maybe one more trend trade short here, right? And, you know, again, this is the iffy one because we're coming off of support. So don't worry about it. Then we said to ourselves, for sure, right, no more short trades because we have a white box. And what we're going to wait for, even though, you know, there was kind of a short trade there, but don't worry about it. We're going to wait for something that's very, very simple. All of the trigger lines will break the fibs, and guess what? We're going to go down again. It's just the way it works, right? And then the market goes down, and guess what happens? You know, we started quite a bit of a down run. The market goes up, the market goes down. The market breaks a fib, guess what happens? The market goes down again. And, you know, eventually, I mean, obviously it was down all the way, and this was your last trend trade short right here that we marked up. And then, guess what happened? They reversed to the upside. Now, remember we talked about the iffy one. Right, so look, right here. As we were coming back up, this was the iffy one that we talked about, right? The should we do a trend trade long, you know, or even one right there. And then this was the second one that was iffy. This one, maybe. This one, maybe. Just look what it looks like on the small chart. It's not magic, guys. You just have to learn the rules and what's high probability trades. And again, look, this was not the prettiest look because it just wasn't the prettiest look. But, what do you guys think about that? Can you see the width of these trigger lines right here? So strong to the upside. Usually when you break resistance and the triggers are that strong, you're going to get one more trend trade. Again, this one only went up from here to here, $600 a contract. Literally, no way you couldn't have made money if you took that trade. I mean, unless you just totally botched it. And then what did we talk about? Maybe one more long. And again, if you make a super strong move, you're going to get one more long trade to get back up and test resistance. It's just the way it works. And again, as you retest resistance, this is where, again, I'd put a white box here and say, hey, this is a little iffy because it's resistance and divergence and all that. So look, hey, no more longs here. When are we going to do longs? Well, we'll do longs when we break the triggers. Right? So basically 2 or 3 longs here, take your pick. Right? 1 long, 2 longs, 3 longs, no more longs. And then you're not sure, and then guess what? Now you're sure. Of course, this is the end of the day. But again, now the market has broken through Fibonacci resistance. We're going to do more long trend trades, for sure. And we already know we're going up to here. So unless there's a reason on our large chart, as determined by these very, very, very simple looks, we're going to do more trend trades on our big chart. And more than most likely, it's going to probably fit one of these first 2 looks. Right? Dark green 14-2 chart, no fibs or divergence lines in the way. Do your trend trade on your smaller chart. And it's just going to be easy, easy, easy. So again, first things first. All this confusion on your little chart you have to ignore until you've got the right read on your big chart. Once you've got the right look on your big chart, you're going to do high probability trades on your little chart. It's always been that way. So again, look at this big chart right now. This is live. What are the chances of your trend trade on your little chart working after you break resistance and fibs and everything else? And you ask yourself the question, what's in the way before you hit resistance and divergence? Nothing. Easy. It's that easy. Period. The only way you can't make money is if you choose not to. Learn the rules. Read through the simplicity in our trading plan. It's very simple. If it looks like one of these pictures, do it. If it looks like one of these pictures in the red, don't do it. That's it. Simple. Come see us in class, guys. We're going to go through this stuff live. It's really simple. It's really easy. I say that after 21 years of working really hard on it, we have made it easy for you. Okay? It's going to take you a little time to really get comfortable with each of your reads, but once you do, the light's going to go off and the sky's the limit. I look forward to seeing everybody in class. Again, if you want to get through this, read through trading plan, page 2 in the plans where all this good stuff is. I look forward to seeing everybody in the room tomorrow. If you haven't started your demo and you're serious about making money, let's go. Start it up. Let's get going. Call your guy. Get your software running. You guys have a great day, and we'll see you guys tomorrow.